Hello everyone, Dividend Enjoyer here, and today I'm going to be going through my top 3 stocks that I will be investing in currently, or I have already added more to my positions with the Trump tariffs and with everything crazy going on. But these 3 stocks are going to be a lot more growth heavy, and the reason for that is that a lot of people are getting out of growth and going into value. It feels like a lot of tech is very oversold when it was once extremely high. You can kind of tell from this chart of Salesforce being down now 2.27% in the last year. It hasn't been very good recently. It's just been dipping and dipping and dipping, and that's often the times when you want to buy into something when everyone else seems to be wanting to sell it. Now, I do think that there are uncertainties and certain risks that come with these companies, but there's also amazing growth and a history of growth that you usually have to pay a lot more of a premium for, and history has shown us that if you buy very high quality growth stocks when they've been hit hard, it's usually a very lucrative, good long-term investment. Salesforce is going to have a little bit more detail for 2 reasons. One, I think that it's a stock that I'm going to be adding the most to my portfolio as long as it's below the $300 mark. And 2, I already had the model from a video that I did that was very detailed on Salesforce stock in general. But to give you kind of the rundown, they've been able to grow the average free cash flow by 31.03% a year since 2021, including the trailing 12-month number. The company is very difficult to get out of once you're in their infrastructure, and because of that, they're able to essentially grow with the businesses that are already in the Salesforce ecosystem, and they're able to improve the product and entice more businesses to come into the Salesforce ecosystem. So I think that this stock has a great track record of growth. I think they're on the cutting edge of AI, and I think that this is a very conservative estimate for Salesforce, considering the technological advancements we're going to have in the future, along with Agentforce, which does look very promising. I think that Salesforce is a great company to be invested in, and I am definitely going to be adding specifically to this position. Now, if we get a more conservative approach and say they only grow on average 7% a year, their free cash flow, you're going to see that there's still 4.5% upside from the current price of $291.97. And if we get a little bit more liberal and say they'll grow 12%, we could see that we have a fair value of Salesforce at $434.80. I think that fundamentally this company is as high quality as it gets. There's great growth ahead for this company, and when it sells off, I am going to value it and look and see if I can add more from my personal checking account, take the money and buy the stock and hold it for a very long time. I think that this stock is worth paying a premium for, and it's really gone on sale. And if you're not going to take anything away from this video, I personally think that Salesforce is probably the best deal that I've found in my personal unprofessional opinion. I think that this stock is a monster, and I am going to be buying hand over fist as long as it's under $300. In case you're not a huge fan of Salesforce, which I can completely understand because it is a pretty risky play, I have 2 more conservative plays that I think are very good deals as they currently sit right now. The first one is Amazon, ticker symbol AMZN. It's currently up 19.66% over the past year. Its market cap is $2.19 trillion, and its price to earnings ratio is 37.7. I think that this stock is an essential in most people's lives. Most people have an Amazon subscription. I think that Amazon is going to benefit from economies of scale, meaning that as they get bigger, they're going to take more of the market from their competitors. I also think that Amazon is one of the behemoth companies competing in the AI race, and they're going to benefit hugely from AI improvements just because they're going to be able to offer better ads from their streaming and other platforms that they own from the media side. And I also think that in the future, we're not that far off from them being able to automate some of their jobs as well. I think that we're going to see increasing efficiencies from Amazon because they are probably the most efficient company on earth. And I really like Amazon fundamentally as a company, especially as a very long-term hold, because you get the cash cow business of the logistics empire that they have, along with all of the different avenues of growth that they are investing in, including AWS. You get the AI research, so much from Amazon that they're constantly investing into growth. They're constantly trying to improve their systems. And this is an amazing company that is too big to fail. It's basically an essential service at this point. I don't know if there's anyone that can even compete with Amazon. They are so monopolistic and so strong. I've already personally added more shares of Amazon to my portfolio since the tariff talk, just because I think that this company is going to have a very, very amazing future. I think that there's still plenty of growth ahead, and I don't see Amazon cooling off anytime in the future. They are very gung-ho about investing in potential opportunities, even if they are failures, and figuring out complex problems and making the investors more money, and essentially just dominating in different markets. So I love this stock. I think that this is a great play if you don't believe in Salesforce, which is totally understandable, and you want something with less risk that has a lower chance of going down in the future, just because I think that Amazon is so strong, and it's very hard to value something like Amazon just specifically because it's such an amazing, high-quality company that continues to be able to grow and increase their efficiencies. And when this stock goes down, I pay a lot of attention to it, and I want to buy more of it. Next up, I have American Express, ticker symbol AXP. It's up 30.84% in the past year. The market cap is $199.49 billion. The price to earnings ratio is 20.27, and the annual dividend yield is 1.15%. I think that this company is a very reliable, conservative play, and I think that you should play this company by dollar cost averaging into it, and it's always better to own more of this company, in my opinion, because they benefit from just continued, steady, reliable growth over time. And I think that as there are more transactions that happen, American Express is going to continue to make more money. I do want to say that this is probably the least risky and most conservative play, and I really just enjoy this company because I think the quality is so high. But it does trade at a pretty significant premium, especially when compared to Salesforce, which is why I personally want more Salesforce, because I have a very long time horizon, and my portfolio already has very low risk when you look at the stocks specifically that I'm invested in, including Vici and Waste Management. So while I do want to add more American Express at this price, personally, I think that Salesforce is a better buy. But if you don't want to own Amazon because of the lofty valuation, or you think that Salesforce is more risky than you'd like to take on, I think that American Express is an amazing alternative that's going to have reliable, good growth. You're getting a decent dividend yield, good dividend compound annual growth rate on this company, and overall just an amazing high-quality company that you really can't go wrong with. The only bad thing about American Express is finding a good price to get in at, and I think that we're there. I think, honestly, if you bought in American Express right now versus a couple months ago, you're going to look back and be very happy in a couple of years because they're going to continue to grow the revenue and grow the free cash flow as long as people are spending money and the businesses that are partnered with them are making more transactions. This company is going to benefit, and I think that American Express is almost always a good company to own for the very long term. It's just hard to put the initial money in because of the premium you're paying for the amount of quality you're getting. And I think it makes it very hard to actually intrinsically value. But I think currently at the price it's at, it's probably a good buy here. If I have more money coming in, I would buy American Express and Salesforce. I probably will buy American Express, but my target is anywhere below $300. $290 or below is an even better sale for me. And I love this company. I'm not ever going to sell any of this company probably in my lifetime. I'm just going to collect the dividend forever and be very grateful that I got into such a high quality company, even though it's very slow moving. I hope that everyone really enjoyed this video breaking down the top 3 stocks that I'm going to be looking at and probably investing in the near term. I think that this tariff talk has really spooked the market in a way that's really unjustified. And I think that there's too much fear right now, especially if you have a long-term horizon. This is not going to affect Amazon as much as it's being priced in if you're going to hold Amazon for at least 5 years. This is all obviously my personal opinion, and these are the stocks that are just on my radar right now, and I'm looking to buy more of. So let me know what you guys think. I think that these stocks are all really solid buys at the current prices because I think that they're very oversold. But again, I'm interested in what you guys have to say about them. If you guys like the video, please leave a like. If you made it this far, please hit the subscribe button. Thank you for watching. Bye.